Hello, and today we are going to be doing Accounting 1, and we're going to be going over Chapter 5, Lesson 1. Chapter 5 is Cash Control Systems, and Lesson 1 is all about checking accounts. So, how do businesses use cash? In accounting, we refer to everything as paying cash, receiving cash. In reality, most of it is not actually cash. Any money is usually referred to as cash, but it's usually by a check. And there's some reasons why we refer to things by check. First of all, it's safer. Cash can easily be transferred from one person to another without any evidence that it really happened. If you have possession of the cash, you are the owner. A check is going to prove who owns the check. It also is going to provide written evidence of what happened. So that way you can't, if you said, well, I paid you, and they're arguing with you, you can say, well, look, here's the check that you deposited for me. So that's going to give our company greater accuracy of our cash records and help solve some problems. Now, some businesses do keep small amounts of cash on hand to pay things that are typically done quite often, but are really tiny, such as postage. Okay, that way they don't have to write a check if they go to the post office and buy one stamp. So before you can start writing checks, you need to make a deposit. So if we deposit cash, here's some vocabulary for you. A check is a business form ordering a bank to pay cash from a bank account. Basically, it's your permission to the bank to give someone else your money. A checking account is a bank account from which the payments can be ordered by a depositor. The depositor is the owner of the checking account. When you get a checking account, you're going to need to sign a signature card. The signature card basically just shows the bank your signature, and that's the signature you should use every time you write a check. When you make a deposit, the bank is going to fill out a deposit slip, and then the bank is going to give you a receipt. Deposit slips look different compared to the banks. So this is the deposit slip for Techno Consulting. You'll see here that it's got the bank name. It has the Techno Consulting's name. It's got their account number and bank routing numbers at the bottom. You put in the date. You're going to list any checks that you're depositing and then make a total. Now, the book says you should use the number that's on the check, this 24-108. For example, here we would be using this little number up here, okay? Now, I don't do mine that away, and I found that most businesses don't. Most businesses are going to write who the check is from. So if John Smith had given me a check, I would probably put J. Smith here. That way I can look back through my deposit slips and I know who paid me and who I deposited money from. So once we make the deposit, we're going to need to record that into our checkbook. Now, business checkbooks do not look like personal checkbooks. A business checkbook is going to have basically your memo area or where you keep track of it over here on the side, and then your check is going to be over here. So they're beside of them. So what we're going to do now is we're going to fill out our deposit slip because we just made a deposit. And so the first thing we're going to do is up here, this part is for the check we're writing. We haven't written this check yet. We're recording the deposit on the next unused check stub. So because this check hasn't been written, we're leaving this blank for now. We'll fill that in whenever we write the check. You can also look at this on page 119 in your book. The balance brought forward, since this is our very opening account, it is 0. On here, you're going to have some boxes. This line represents the cents. So it was $0.00 is what we had for our previous balance. The amount deposited. We're making our deposit on August the 7th. 2016. So each one of those goes in one of the boxes, and we're depositing $5,000. Okay. Our subtotal, we would take our balance that we brought forward from our last check stub. In this case, it was 0. Add our deposit to it. It is $5,000. Now, you don't make a deposit every time you write a check. That would be nice, but it doesn't happen that way. So in that case, you would just skip, if you just wrote a check and you didn't have anything on the deposit line, you would just skip the amount deposited blank. This number would come straight down here. Down here is where you were going to fill in the information about the check, and we'll do that later. Okay. We do not need to record this in our journal at this time because we already recorded when we received the cash. So this $5,000 could have been several different little checks. We recorded those as we received them in the journal, so we don't have to record it when we make the deposit. An endorsement. When you take your check to the bank, you must endorse it. The reason why is an ownership of a check can be transferred. Sometimes you go to a business and you see no two-party checks. That's transferring of a check more than one time. So we can transfer it, and an endorsement is the signature on the back of the check that is transferring the ownership. You must sign it exactly as on the front. For example, if the check was made out to K.A. Park, she would sign the back K.A. Park and then put Kim Park below it. Checks can be transferred several times. Typically they're not, but they may be. And if your bank does not receive payment from whom signed the check, the person who wrote the check, if the check is bad and it bounces, each person who signed the back, who endorsed it, is liable for that payment. So if John Smith wrote me a check and I signed the back of it and endorsed it and took it to my bank, and John Smith's bank said, hey, John Smith doesn't have any money, then that money's coming back out of my checking account. Okay? So if I had transferred it to then somebody else, each person, it would go back in order to the person. Because John Smith didn't have the money, the bank's not going to be held liable for the money. That's me. And I've had that happen. I've had people write me a check, and for some reason the check was no good. They had deposited the money in my bank account, then my bank took it back out, and they charged me a fee to do that. So let's look at how we are going to endorse it. There are 3 main types of endorsements: a blank endorsement, a special endorsement, and a restrictive endorsement. The blank endorsement is the most common type of endorsement you're going to see. Okay, this one is just simply your name. So I'm going to pretend like this is Kim Park endorsing it. That's all there is to a blank endorsement. It is just the person's name. Only in the endorser's signature, it should be a signature. The problem with a blank endorsement, the new owner is whoever has possession of the check. So this check can be cashed by anyone. So if I sign the back of a check and then I lose it on the way to the bank and somebody else finds it, that somebody else can take that check and cash it. I can't prove that it was mine. Okay? So you should only sign the back of it at the bank. So if you're using the blank endorsement, only do this when you're actually in the bank. Okay? Special endorsement. You don't see this one very often. This is what we call like a two-party check. And a lot of businesses have up signs that they will not receive a two-party check. It's a special endorsement. It indicates a new owner of the check, and only the person named can cash deposit or transfer the check. So this one we're going to put pay to the order of, and whoever we're giving this check to. This is going to be Eleanor Johnson. And then we would sign our name. We're Kim Park. Okay? So, a special endorsement says pay to the order of, who the check is being transferred to, and then we still sign it. Now Eleanor Johnson has ownership of that check. When she takes it to the bank, she's going to have to endorse the bottom of it. Finally, restrictive. This is the one you should use if you're filling out your deposit slips and signing your checks before you get to the bank. Restrictive restricts any further transfer of a check, and it limits the use to only the purpose that is stated. Most businesses have a stamp, or whenever they run it through their cash register, it puts a stamp on it that is a restrictive endorsement. So a restrictive endorsement could say, for deposit only, to the account of Techno Consulting. Okay? The only thing that can happen with this check is that it can be deposited into the account of Techno Consulting. So if I lose this on the way to the bank or misplace it or somebody steals my purse, they can't do anything with this check. It's no good to them. So let's look at filling out the actual deposit part over here and writing a check. So we're going to do the whole thing here. Okay. Now we already filled out the amount deposited, and if you're in class, there should be some of these for you so that you can put this into your notes. I'm going to zoom in a little bit. So we already had our brought forward, which was 0. We made our deposit on the 7th of August for $5,000. So our subtotal was $5,000. Okay, that's what we did in the last step. Now we're ready to write a check. The check stub is a business record of a check written for cash payment transaction. This is your objective evidence. Be sure you put that in your notes. It's on page 121. You should fill out your check stub before you write the check, because it's too easy to go ahead and write the check and forget to do the check stub later. Go ahead, do your check stub first, and then you don't have to worry about it. So the steps. The first step is to write the amount of the check in the space after the $sign on top. It's talking about right here. The amount of this check is for $275. So I'm going to put my $275 there. Step number 2 is to write the date of the check. Today is August the 3rd. So I'm going to put August the 3rd, 2016. Who is my check to? I am giving my check to Port City Supply Company. And why am I giving them the check? Because we bought some supplies. So I'm going to put supplies here. Okay? Next, we need to come down here because we want to make sure we have enough money. The other, we're going to leave this blank at this time. The things you're going to put in there would be if your bank charges you a service charge, that would go in there, or if you've used your debit card, you're going to put that in there. So, subtotal was $5,000. Other, we didn't have any other stuff, so our subtotal is still $5,000. The amount of this check was $275. So our balance carried forward, we are left with $4,725. Okay? So now we can fill out the check. We're going to put the date, August the 3rd. Who is it to? It's to Port City Supply Company. What is the amount? The amount is $275. Now, when you write the amount, a lot of people do this wrong. I have to admit, I'm in the habit of doing it wrong. But you really should just write 275.00. Okay? Some people do it differently. This is the way you really should write your check. Then down here, I'm going to write out the 275 in words. $275. I start all the way over here so nobody can put an extra money in it. I'm going to put the word and. No 100ths, and then I'm going to draw a line for whatever's left all the way over to the dollar. You want to make sure this line is completely full so that nobody can put anything in there. If this number and these words are different, the bank is going to go by whatever is written here. Okay, 4. This is our memo, so this was for supplies. And then we're going to sign it. Okay, so that is filling out your check, and there is your check stub. Something to know, a post-dated check is a check that you write and you put a future date on it. You should not ever write a post-dated check, and you certainly should not ever receive a post-dated check from somebody. So if today is October the 1st, and you say, well, okay, I want to go ahead and give you this check, but I don't get paid until the 5th of October, I'm just going to go ahead and make it out for the 5th, and then you cash it then. Well, you really shouldn't do that. There's a couple reasons why. First of all, the bank's not going to accept it until August the 5th, which is fine because that's why we were holding them. But one of the problems with that is if something unfortunate would happen and that person would die, their check is no good. So if they died before October the 5th, you couldn't cash it, even though they intended for you to be able to. Another thing is if they close their account before October the 5th, you can't do anything with your check. So I recommend you not ever take a post-dated check. In my personal business, if somebody needs me to hold a check for them, I go ahead and have them put today's date up here. And then I put a sticky note on it and says, hold it until October the 5th. Okay. Okay, the last thing we need to talk about is recording a voided check. A voided check is a check that you messed up on and that you wanted to throw away. So if we didn't want this check anymore, we would put void really big across the front of it, and we would rip it to shreds. Okay, but we need to record that in our journal. Now, if the check was good, we record that in our journal, just like we've learned how to do in the last couple chapters. Okay, we know how to journalize those. So if I had a voided check, here's my little sketch of my journal. Super easy. We're going to start with the date. The date was, let's say, the 15th. Okay, account, I'm just going to put void. For document number, I'm going to put what it was. It was check number 20. Post reference, we're going to go ahead and put a check mark because we will not need to post that anywhere. Then all I'm going to do is come over here to the cash credit, because if I wrote a check, it would be recorded in the cash credit column. And I'm just going to put a line indicating that nothing goes there. That's all I have to do to record the voided check. So if we just go ahead and take a look, that's the end of the chapter. Terms for review. You have several of them here. So make sure you have gotten those out of your book and you put those terms for review in your notes. Audit your understanding. These are simple. What are the 3 types of endorsement? List the steps for preparing the check stub. That's just going to be over here, just this top part here, we're preparing the check stub. The next one says list the steps for preparing the check. And that's going to be the rest of it, 7 through 10. Okay? So I will see you in class.